All right, hey there, guys. Sam from TradeDevils-indicators.com. Okay, this is going to be kind of an informal video here. In essence, what I'm doing is I'm replying to a number of questions that I've received from a customer. He's taking a very thoughtful and deliberate approach to his trading, and he's looking at integrating our measured moves indicator, the Auto-Fibs, and the market structure indicator, and he's asking me a lot of questions about how to enter, where to enter, what's the difference between the two, how do I use the two together. When there's more to it, let's start with just the basic questions here. And I think my idea here is that his questions are not unique. We get them from a number of either people that are trialing the indicators or that have purchased, and now they're trying to get clarity on this. So I thought in answering his questions, perhaps I might be able to answer some other questions as well along the way, or at least address issues that we get asked about frequently. Okay, so I think here, I've got a 15-minute, and for his purposes here, he's a swing trader, which is actually kind of a nice change. We focus so much on day trading, but he's a swing trader looking for trades on the 2 to 3 day range. So he's working 15-minute, 1 hour, 4 hour, and per his emails, he's also working with a daily. Well, I've got us teed up here to take a look at some of this. I've got a 15, a 60, and a 4 hour here. But that'll serve our purposes, I think, just fine here. But let's focus first here. I'll pop this back up. Let's focus first here because this is such a common question, and I think I've explained this, but I'm going to try again here. So I've just got, really all I'm after is the blank space here. So let me try and work through this again so that you understand. Okay, so we'll just use a bullish swing here, right? So here's the basic premise, right? Here's the dominant algorithm, right? One way or another, that algorithm is, well, think about it, right? It's a two-dimensional, our chart's two-dimensional, right? There's only so many things it can do. This is essentially all the market can do. That's it. Right, that's all it can do. So what we're doing here is just trying to identify this algorithm here, because we know it's been, again, I didn't discover this, right? If you want to know the history of this algorithm, there's a, I'll post it underneath. I'll post it underneath this video here because I went through the entire discovery process of this indicator or of this algorithm here. So now, again, as I've said many times, God knows how many algorithms are in the market. I mean, more than we could possibly imagine. This just happens to be one that we can track because it leaves very clear footprints, right? So that's why we focus on it, and then you'll find it in every market at every time frame. It's quite remarkable and deceptively simple. You would think it would be more complex than that, but amazingly, it's not. Okay, so let's just focus on this for a second. Okay, let me come back here to right here. Okay, if the market, let's just say this is our, well, it doesn't matter, right? So here's our pivot. We've had a swing. We start a retracement. Now, at this moment in time, we have no way of knowing. If we just isolate on the swing here, we have no insight into whether it's going to break this low or break the high. Right, other than perhaps, and what we'll get into market structure, the context of where we are. That's the only real clue we can get, is what's come before it. And are there levels here that we might be running into, either above or below, or in the midst, or as we're rallying here? Are there potential roadblocks, for lack of a better term, right? And I think, well, we'll look at some examples of that. Are there roadblocks here that would be problematic for this? It was going to have to fight through to get to its target. So let's go ahead and put a target up there. All right, so here's our swing, right? There's our target. Okay, so as we're looking here, it's just the reality of trading. We have to identify what kind of roadblocks are ahead of us here, because I think we all know, anyone who's traded, whether you're swing trading or day trading, you know that it could be more now. 95% of all the trading that is done in the stock indexes is done by computers or algorithms, right? Software, right? That's what 95% of the volume is coming from. So it would make sense that we try to pay attention to all of the potential levels, zones, occurrences, whatever it may be, that algorithms will key off of, and they will key off of anything and everything they can. So, right, we can't, you can't, you have to recognize them, but there are so many of them. At some point, many of them are going to have to break, right? The force of the trend, or the short-term trend, or the aggressiveness of the buyers of the sellers is going to overcome, right? They're just hurdles, right? It would be just like if we're thinking market structure. If we thought, oh, we've got a supply zone up here because money had to be committed to drive it down to create the retracement. So as we're coming back to this, and this is just basic market structure theory, if we're coming back to us, it's very reasonable to assume that there could be unfilled orders here. There could be just supply. There could be those that sold it here defending those short positions because their goal is to take it down here. Because now keep in mind here, this is where it gets a little tricky here, but I'm assuming you guys can stay with me here. We don't know if we're completing here. Let me see if I can put the whole thing together. I know. All right. Maybe someday I'll start working with a script, but this is how I do it. Okay, so we don't know when we get right here how this is going to progress, right? So how would we know? Right? Are we going to go here? Or are we going to go here? Right? So I'm just adding the context to the left. Right? So this is the trader's dilemma, because just as easily here, right? Now this is just reality, right? I can't change this, so you have to face it, right? Okay, and we got to deal with it. Okay, now look here, right? So I've got this algorithm fighting me on both sides. Well, fighting me is the wrong way to say it. It's present on both sides, right? So here. Right, so when we started, right, what did we think? We thought, oh, well, it's a swing, it's a retracement. How simple, right? Well, not so fast, right? Where's the context? What came before it? Is the swing here a retracement? Is this the retracement? How about this? So you could well, here I could take this higher. We could go here. So we could have this being an internal retracement to this swing. We come here, this is internal to this swing. We could then, again, depending on the time frame you're trading, this could happen yet again right here. Right? You can have another one right here. Welcome to trading. This is the reality of it in 2022. Right now, look do you see? I have no way of knowing as we sit here now. Right now, we've developed some tools to try and help you with this, but you have no way of knowing which one of these is going to hit. They could all hit, actually, and still, right? So one of them's got to break somewhere, right? So this one could break. We could go from here and just continue down and then go up here. Now, we wouldn't. Now, note here, if that happened, you would not have the algorithm working for you. Right, the only way you would get another buy-side algorithm here, even though you look at it and say, well, oh, hey, well, it broke the high. Okay, it broke the high, but it's not it's not this particular algorithm that's driving it, because it was broken here. The way the algorithm works here is that if we get a close below the 65, they will reverse because they'll just take the next one. So, oh God, I've got so many here now. I'm getting confused. So here, well, let me just stay with the thought here. They'll take the next one. So how would we get to tuck in behind another buy-side algo? How would we do that? How would that happen? Well, it would only happen if we did this. Now see, all we're trying to do is get behind them and let them lead. Get you off there. All right, thing sticks to your mouse. Okay, so let me see if I can put this together. So this is very much what a day will look like. Just a constant ping pong between this algorithm. Right now, then we have to use the additional tools. In our case, right, it's tools that we've created to help you not get caught in this. So so you look somewhere like this. How do you know who's going to win there? How would you know? Well, it would be very hard to know. Right? Likely you would let this clarify before you would try and force a trade there. Now there could be something additionally that happens. There could be all the delta here as we're climbing is negative, and then you get a big burst down here. It could be something you see in the order book. I mean, there's so many variables here behind this. It's hard to make it simple because trading is not simple. We can try to simplify the process, but the reality of what's going on behind each one of these little swings here, simplified via line drawing, is quite complex. So we do want to try to simplify it, right, to make it easy for us to execute, but we've got to have some sense of what's actually happening in the background. So I understand that I may have just confused you here, but you need to get over that, right? Because this is the reality of what's happening in the market. You're going to fight this all day long. Now, this could be on a 1-minute chart. This could be on a 15-minute chart. Could be on a 60-minute chart. It wouldn't matter. The same thing is happening at every one of those degrees, every one of those time frames, if you will. So you've got to recognize this. So when someone asks me for clarity on, okay, well, what's the right way? So for example, if you were a seller here, because whatever reason, right? If you were a seller here, your target is down here. Okay, so you can't, you have to be mindful of the fact that, okay, well, there's an algorithm that's participating here that let's say I've tucked in behind it and I'm going for the short and I'm looking for that target. Well, of course, before it can get to the target, it's got to clear the buy side algo. Right, so this is a very reasonable place if you caught this, right? So you got a couple of things that have to happen. First, what happens at the 50, right? Because you could just as easily pop at the 50 if it gets to the golden zone, right? Okay, why do we like the golden zone? Why do we prefer the golden zone? Because the risk reward is better. Right, that should be logical, right? So if the stop is below the 65, if I enter at the 50, I've got much more distance to my stop. If I enter at the golden zone, very small amount of distance, which is why in previous videos I've talked about if you're not sure, or if you have the resources, or perhaps you're trading micros or you're trading options. I mean, there's a lot of different ways to get yourself positioned for that potential retracement and then going towards its target. Because if you're a buyer here, your target is up here. Right, now I know this is getting confusing here, but you got to understand this, because this is the reality of it. Okay, so if we let's go back to you being a seller here, right? So I know I'm bouncing around here, but there's no easy way to explain this, right? It's almost, you have to see it and watch it happen and go, okay, I'm starting to see what's happening. If you're a seller here, first we have to clear the 50, then we have to clear the golden zone. Now, barring some news event or just a lot of size that comes into the market that is determined to get to that target down here, you're very likely to see a reaction here. If you don't see a reaction here, well, that's kind of a heads up that likely we're on our way to target. But my point being, if it just blows right through it, right, then we have fierce bullish momentum here, because there's almost always a little reaction there, because the algo will fire there. You'll often see it blow right through the 50, but then you'll get a reaction at the golden zone. So if you're picking between the two about which ones to trade, you always want to defer to the golden zone, just because the risk is lower. So when you get right here, knowing that you're likely to get a reaction, you as the trader have to make a decision. What am I doing? Am I trailing with a stop? Am I taking a partial off here and I'm going to hold for a runner? Well, what's the next thing that has to happen? Right? I mean, again, this is trading reality. Okay, 786, 764. Well, guaranteed there's algorithms tied to it. Not this one. Not this one. But likely something. So next thing we have to clear is the 786. Then what's the next thing we have to clear? We have to clear the pivot, right? So if you're holding short, this is why in every one of my videos I make a point of emphasizing this. This is the absolute worst place to enter the market. The worst. Because you make yourself vulnerable, and if you've traded for more than 3 days, you know this is a reality. You make yourself vulnerable to the liquidity grab here, because every pivot, every one of these pivots has liquidity behind it. What's the point of the markets? To facilitate trade, right? Where is if you watch an order book, you'll see the market move to where there's liquidity. Well, there's going to be liquidity here. So if you're entering, okay, look, it's already going down. I'm going to go get that target. Worst place to enter, the very worst. So because you're vulnerable to that, right? I saw it 3 or 4 times today. Breakout traders, they never learn. Thankfully, they never learn, because it happens once and maybe they made some money, so now they just keep doing it. Keep doing it, right? I'm just telling you, over time, all you're doing is giving money to professionals, because they're baiting you down here. Oh, come on. Now, That doesn't mean that we can't get here. That's not what I'm saying. I'm just saying don't enter here, and be aware if you sold it here and you cleared the golden zone, you cleared the 786, 764, and you're heading towards the pivot. Be aware that that's likely where you're going to see a reaction. Again, if you've been trading for more than 3 days, you've seen it more than once. All right, now that doesn't mean you bail here and you don't make it to target. It means you've just got to have an awareness of where this thing might turn around and it doesn't make target. Because just because we have an algorithm firing here with a target does not mean that it's going to get its target. It just means it has the potential, and we've gotten closer. But this is something you'll see all the time. You'll see a golden zone bounce, double bottom, and complete trend change. Happens all the time. All the time. So you can't lean so hard into the idea, oh, I'm staying short until I get to that target, because you could very easily give everything back. So we're getting a little bit into money management here, but the most reasonable way to extract maximum benefit is to be trailing with a stop. That way you're going to get as much as you can. Now, it's up to the individual. I can't give you like a perfect formula, like, oh, do it this way, and that's going to be the secret to success. There is no perfect formula. There is only market experience. Okay, so if the market's coming down here and I get a few pivots, well, I want to tuck a stop in behind that. And remember, so maybe it was this, right? You were here, and you got to the golden zone, and now it's kicked back. Well, you got to think about that. Okay, I hit the golden zone. Oh, wait a minute. Does that mean it's not going down here? How would you know? Well, you're not going to know, right? So no one knows, right? There is no knowing. There is only odds. There's only probabilities. Well, let's say we retrace all the way back here. That's a pretty good retrace. That's 10 S&P points, or approximately 10. God, what am I at here? 37.22 to 37.30. There's 8 S&P points. Now, if you took this short, no, this is probably a little bit more day trader like, but let's say we were on I got a 50-minute here or 5-minute here, but let's say you were on a 60-minute. Well, if it's kicking back to the 50 of this swing, are you staying for that? And let's say it hit that and then it got to this target. Okay, now what? Right, you still got a target down here. You still got that target. What are you doing? Right? You got an internal one that went right to target, happened to pivot right at the 764. Whoa, right? Because this could easily happen. Now you're right back to where you got in the market. And nothing has happened. Now, note here, remember, there has to be a close above that 65. This could just now turn and go get that target. Here's the target, right? It could easily do that. It wasn't stopped out. It's going to have to come back down. So this is incredibly common. So swing, retrace, golden zone. We come down, bang the golden zone. Up, are we going up to this target? Nope, we ran into a 50 here. Oh, we're coming down. Oh, we hit that target. Oh, it's a 786. Oh, what's happening here? Oh, well, I've got lower low, lower high, lower low. Oh, maybe good. Oh, wait a minute, I got higher high. Oh, what? Higher low. Maybe I got a trend change. Oh, so now I've got an internal that went to its target here. Oh, but I didn't break the 65, so it could easily turn around and come down and get the target down here. This is incredibly common. Very common. When we look at examples today, I'll probably show you 3 or 4 of these. I mean, this is what's going on all day long as algorithms are just battling back and forth. All we're trying to do is look for those opportunities where we can spot it and we can say, okay, I can see, there's more to it than this, right? You're looking at what's the volume profile, what's happening to the left, what's going on in the order book, where can I see the limit orders? I mean, there's so much more to this than I could. I don't want to simplify it to the point where you think this is easy. This is incredibly complex. So if you're a seller here and you made this amount of money here, I mean, I am always in favor of banking some capital. So if I took it wouldn't matter if you had a 3 lot or a 30 lot, or you bought a couple of S&P puts, or you're trading SPY options, whatever it may be. If you get to this point, you have to recognize that it's vulnerable to turn around on you. So you have to do it this way. Now, let's say, for example, here, let's say we got there like this, right? We could have something like this. All right, so if you're right there, where's the logical place, right? The market is going to know where your stops are. Right? It's at the pivot, right? So if they can get up there and get them, well, they could get you out right here and then carry on. So when you get this kind of a move, my suggestion is you got two choices. Either you're trailing with a stop, willing to give a little bit back, or you're going to take a partial here, so you bank some profits, and then watch to what happens. Because it's not that it doesn't happen, but certainly depending on the time frame, what is less probable is that we're going to go in a straight line. Now, gets a news event. I mean, you saw a big sell-off today in all the markets, all the indexes, right? I kind of came out of nowhere. Maybe it was tied to the Apple news. We looked in my trading room. We're looking for what's going on, what caused it. Fortunately, I wasn't in the market, but I mean, big moves like that go in straight lines, there's usually a reason for it. The more typical progression of the market is this kind of back and forth between 50s and golden zones, 50s and golden zones. That's all it does. Remember, 95% of all the trades that you see in there are not being done by traders like you and me. All right, it's all software. Okay, oh God, there's 20 minutes. I don't know if I've made any progress. Okay, okay, so my goal here is kind of open your eyes here via the line drawing so that you understand that there's a lot of complexity to this, and much of what we're trying to do is look for the open spaces. So I'm looking for that open space. So if I can see here, I've got room here, and there's nothing in the order book. There's nothing that's blocking me. Yeah, I have a pivot here, but so I've got to be mindful of what could happen at a pivot, and I've got to be mindful of the fact that there's a golden zone there. So I'm coming up here. If I get to that, if I get here, okay, well, look where I am. I'm right to where I started. So yet again, with regard to market structure, there could still be unfilled orders up here. This is a supply zone, right? It hasn't gone away. So when I get here, I've got this ramp here. Now, let's say this is a 4-hour chart. That ramp, this distance right here, could be a nice return on your capital. Could be a stop, right? So why do we, again, to emphasize here visually, why would I want to enter at the golden zone if I can't? Because the risk is much lower. Right, so if I can get that, so I can get this and say, okay, well, I just hit one here. Do I want to bank some profit? Because this one here has broken. So this one, let's see here. This target here is no longer active when we close below the 65. So even though it's still up here, because I haven't erased it here, that's no longer a target. The active large target is still down here. And I won't get out of that until that won't be off the board until we get a close above that 65. All right, so if you're right here and we're coming up towards that, I had distance there. I want to bank a little bit there because I'm coming right into a supply zone. So so to my friend here who sent me all of these questions, he's looking for a more methodical black and white way to approach this, and there isn't one. If there was, I probably be trading from my yacht in the south of France. It's not that mechanical. There are just too many variables in the way. Okay, let me. I probably confused the hell out of you there. So let me pull this off here. Let's go to the market and try and show you some examples of this. Okay. Now this is kind of an unusual. This is not the best set of days here because we have massive volatility. But despite that, even in this volatility, let's just see if we can make some sense of this. Okay, is this a good spot here? Well, there is one really obvious. Well, let's do this. Let's see if I can get it. So here you can see it. Now, keep in mind here that when you're looking at this, right, what you're seeing are all of the completed measured moves or measured moves that are still in play. For example, here's one right here, and I would have to take me a minute here. That's probably the actual low here. Is it? No, it's going to be a secondary pivot. Okay, right. So I'll show you how we keep track of these. Maybe it's that one. It looks like it's that one. Okay, so we've got pivots down here. Now they look smaller and less significant, but if we were down to a smaller degree, these would be significant. And you'll note that each one of these little pullbacks here is coming from the golden zone, or between the 50 and the golden zone, or the 50 to the tick, or the golden zone to the tick. So you see it starts a series, and it goes and goes and goes and goes, but the whole thing is waiting to get up here to a target. Let me pull that off here. There are unrealized targets up here. So the point I was trying to make is, you can see here, if we look right here. Okay, so here is a very large swing right here, because I can tell by the distance between the 50 and the golden zone. So I'd probably be seeing that better on a 60 minute. Oh yeah, that's going to be above, right? So I can just tell from the size of it. All right, so could be that one here. Let's just take a peek here. I'm not going to put all the lines on. There it is. Okay, so from this pivot, we come all the way down to this pivot. Now, I'm kind of trying to take you back to what I was just taking you through. We start here, right? So this algorithm has come back to, here's the golden zone. It closed the day there, right? So do you see it up here? Here's the golden zone right here. That's where this was the high of the day in the golden zone. Now that algorithm has a target down here. All right, so this guy has a target down here. Now, is it going to get there? No idea. No idea. What would take that target off the board? I got to have a close above the 65. You can see there are targets here from these measured moves with targets beyond the 65. If these get hit, this comes off the board. This disappears because it's been broken. So we don't want to leave all the broken measured moves on the board. Your chart would be an absolute mess, which is kind of where I was going when I started here. You're only seeing the completed measured moves, and completed means there's a green line, as in it hit its target, or the targets are yet unfilled. Right now, we're talking about the measured move indicator, not the Auto-Fibs. So you look here. So let's zoom in today. Right, this because this was interesting. So let me take all that off here. Now, look at the low today. What do we here? I'll draw it for you, so maybe it's a little bit easier for you to follow. All right, so this is today. All right, so I don't know. This you need to get this on your chart, right, to really appreciate it. And one of the things here, and I'm going to digress just for a second. People are always asking me, measured move or Auto-Fibs? Which one? Measured move or Auto-Fibs? Well, measured move, I think the great value of the measured move indicator, I'm talking specifically measured move, what you see on the chart, not the Auto-Fibs. The real, in my view, the value of it is that it shows you day after day after day after week after month on any time frame. It doesn't matter. It reinforces in your mind how significant this algorithm is. Now look here, all I've done is pull up a 15-minute chart and just turn the measured moves indicator on. Every one of those green lines, every one that you see here is that measured move getting its target. I challenge you to show me something better, more accurate, that does this frequently. That's an easy challenge for me to make because I know there is no such thing. You can't show me anything better, more consistent. You can't. Or more universal across all markets. And I mean from crypto to FX to individual equities to indexes. It's in every asset class at every time frame. Period. If you don't believe me, and you shouldn't believe me actually. You should do the testing yourself. And this is one way to burn that into your brain. Put it on your chart. Trial it. You got 5 days. Take 5 days and count up the number. Pick your time frame. Count up the number of times that it hits. It literally will blow your mind. Most people don't believe it, right? They think, oh, that's bullshit. Well, here's where we started the day. We had a big rip up. Here's the retracement. What do we do? Right, I talk about this a lot, right? So this is the top hat trade, right? Where you've got a big cluster like this, right? It's the Lincoln top hat, right? Is what I call that. Okay, so when we have a retrace that's coming down into that stack of algorithmic activity, that's a very safe trade to make. Now, by no means am I saying that couldn't just keep going. The market can do anything at any time. It's not required to do anything. It could just keep going. But when I see that, right, as traders, all we get is the slightest of edge. That's it. You don't look for more than that, because that's a fool's errand. All you get is the slightest of edge, that I know that I'm at a location here. Now we can put some additional things together. We can look at that and say, okay, well, I'm coming into a stack of measured moves here, but I'm also at a high volume node. Oh, this here was clearly a high volume node. Here we're just looking over here that I've got the 7-day and the 30-day volume profile. If I'm looking at a 15-minute here, I'm going to draw the volume profile from swing low to swing high. I'm going to use our toolbar and do it that way. So that'll take a minute to calculate. And so, but I can look right here and say, okay, well, that was obviously consolidation here. So there's the POC. So again, this is what I mean. It's not black and white. So here's the POC. Here's our low. Right, you can see it on the high volume node, but I wanted to see specific here, so I draw them myself, right? So for specifically here, and then I keep the weekly and the monthly over on that edge, particularly if I'm looking at a 15-minute, because I want to be more precise. I would have been curious to see the volume profile as it came back up. But here I'm working from swing low to swing high. All right. So when we start this retrace, I'm paying attention to that. That was a nice looking trade today. Now, oh God, I could go into so many other things here. But let's stay focused. This is my problem. I'll digress and just trade talk. So we'll stay here, and this will stay with a long bias here, because, well, here, let me come into it this way. We have this big cluster here. We know an algorithm persisted. It came back down. It tested it and went again. So as long as we stay above all of these 65s here, there will still be an upward bias to this. Now, you have to note here that if I take the low to high, as we're coming back this direction, we have broken the sell side algo. So what I was talking about before, there's less resistance here for me to get up to some of these upper targets here, because there's no longer a sell side algo blocking me. Now I have some natural resistance from the open. I have the IB high. There's a pivot here. There's the larger pivot here from that first swing is right here. Right here, you can always look to the left and see what it's pulling from, right? That's one way you can see it. Okay, so here's the golden zone that it's driving from. We had multiple little golden zones along the way. We got up here, we didn't make that target. We retrace. What do? All right, we just went over that. Okay, now we start the climb again. Attempt. Now this is actually kind of interesting. Oh God, this is going to be a long video, I'm afraid. Okay, let me try and show you this. Back to the. Let me get this out of here. Back to the example I was using when I was drawing over here, talking about all of the issues that you have here with multiple. Come over here with this, right? Back and forth. Who's going to win? Who's going to win? How do we know? That's where I'm going here. So let me, having refreshed your memory there, let me pull it from the top. All right. So we go down to the low. Okay. Now let me take the measured moves off here. So I'm just going to go Alt M. All right. So I want them off to clarify for you. So do you see now what's happened here? So we retrace to a golden zone. We kick back up to another golden zone. We retrace. Now we don't get to target. Right. So this golden zone here is no longer on the board because it's been broken. It was perfectly legitimate. This is a decent trade on a 15-minute. I mean, that's a good-looking trade from 3740 to 3700. There's 40 S&P points. Are you disappointed that you didn't get to target? Well, if you're trailing with a stop, you probably gave some of it back. If you shorted a put here, well, it was time to get out, right? Because you've got. Remember, you've got a. Here, let me put it back on. You've got this big cluster here. So here's a perfect example of what I was trying to show you over on the line drawings here. I got a 50 and a stack of golden zones here. I bounce up, I hit the golden zone here. I bounce down. Whoop, not going to make target. These bulls win the day. They break. Now they have the advantage. But note here, there is no longer, with the break of that 65, there's no longer a sell side algo to block me there. How would one show up? That doesn't mean that we're going to go tomorrow. Oh, shit, we could do it overnight here. But it doesn't mean we're going to do that or that. It just means the potential now is there, and I don't have resistance. Now, note here. Now, so stay with me. If we come down here and we start to retrace, and then I come back again, guess what? There's going to be another one right there. Right? No way around it. That's what's going to happen. Right? Because the sell side algo will be there waiting again. Right? With that, it's target. Even though, oh, hey, it broke. Oh, we're going up there. Well, not if we do this. And again, I'm not saying that means, oh, if it hits that, well, then we're going here. It could hit that, and then just keep going and get to all those targets. Look. Welcome to trading 2022. How would you know? Look, it's happening all the time. Here's the harsh truth. The people on the other side of this, they do not care which side wins. They could not care less. Because they know that eventually they're going to get on the right side of it, and they'll work a series of, here, 1, 2, 3, 4, 5, 6 in a row, right? Just the last couple of days on a 15-minute. That's why they don't care. Eventually, they're going to get a series going where they make so much money, it compensates them for all the times that it didn't get to target or they got stopped out. Same thing here. Hard reality. Welcome to trading. There's no easy answer here. There is no do it this way and then you'll be just fine. The only thing that I can tell you is you have to know where these are. These are literally landmines. And if you don't know where they are, I've used this analogy many times. You're walking through a minefield with blinders on. You don't know where the bombs are because you will sell or buy right into these and have no idea why it turned. Why did it turn here? That's always the question. Why does it turn there? Why didn't it go to target? Why did it turn here? Why did it turn here? Why? Right? As traders, right? Particularly if you're analytical by nature, why is it stopping there? Why did it stop here? Why did it stop here? Right? It's a constant process, and then it's a process of deductive reasoning, saying, can I figure out why it stopped there? Okay, well then you're now okay. Was it an indicator? Well, I can guarantee you it's not an indicator. Was it something in price action? Was it a level? Was it a high volume node? Yeah, that's much more likely what it's going to be. Here's what it's not going to be: anything underneath your chart. There's no indicator that's going to clue you in on this. You have to know where these are. I mean, there are I don't know how many thousands of traders every day that get stopped out of something because they have no idea and they don't understand why. Oh shit, I let the thing look like it was going to go. Man, I can't figure out why it stopped there. Every day, all day long, happens every day. And thankfully, right, because the people that do know where that is, right, have a slight advantage. Right? I'm not going to sell right into that. I don't care how good, well, I mean, just general practice, something that's falling that hard, the markets don't, unless there's really dramatic news, markets don't move in straight lines. They swing, right? They swing, right? It's swing, retrace, swing, retrace. Remember, I mean, think of it, this is all the market can do. It's all it can do, swing, retrace. It's going to go internal or external. That is it. There is no other option on a two-dimensional chart for it to do anything else other than go sideways. It can go sideways, but that won't last. And again, keep in mind that one side of this algorithm has got to break, or we would go sideways forever. So the algorithms are breaking on both sides all day, every day, at all time frames, right? Just like they're hitting at all time frames, they're breaking at all time frames. Well, I can imagine people thinking to themselves, well, holy shit, man, how am I ever going to make any money here? If this is going on all day and I got to fight a buy side, sell side, well, part of me wants to say, whoa, you thought this was going to be easy? Well, think again. Now, when you look at it like this, can you see how this could be beneficial? Right, at the very least, you got to know where they are, right? At the very least. Okay, so let me get back to the difference. Oh, God, this is going to be, I'm going to have to do this in a couple of different videos here. I'll be here for 3 hours. Okay, let's go to the difference. Oh, let's see. Okay, let me take the measured moves off. Okay, remember, it's just, well, here, let's come back to this. All right, so I'm going to take all of this off and just make this point again. So let's get rid of these. Okay, we'll come back to just our line drawing tool. Okay, let's talk measured move indicator first when we get right here and now. All right, now we don't know. Okay, oh, here, shit. I think it sticks to your mouse. Okay, when we swing, retrace. All right, so let's tee it up. Now, if you're thinking about the measured move indicator, right, that's going to show you that it's that is there, not in real time. Oh shit! Here, let me do it. Let me do it again. Let me do it this way. I think this is the biggest problem people have. They don't understand this. Okay, when this comes down here, the measured move indicator is not going to show you that there's a 50 and a golden zone there. It's not going to show it to you. That's what the Auto-Fibs does. The measured move indicator, stay with me here on the measured move. If we hit the golden zone here, it's got to move a set number of ticks to move away before we're going to show it. Because otherwise, you're going to have dozens and dozens. Your chart will be littered with broken measured moves. It has to get just far enough to where we can say, okay, that's a valid pivot. Right now, it has the potential to go here. Otherwise, your chart would be so cluttered with those, you wouldn't be able to see the price action. So it has to move just a certain number of ticks that we set, but it's got to get just far enough to where now it's going to show, and you're going to see the target at the same time. Now, the Auto-Fibs, on the other hand, is going to show it to you as it's coming down. Let's take that off. Come back here. Oh, shit. Can I do it? Maybe not. Okay, let me try again. All right, Auto-Fibs, when they're turned on, are going to show you as that starts coming down. Once we get a pivot here, as soon as that pivot is there, it's going to show you there's a 50 and a golden zone right there, and it's going to show you where the targets are. The measured move complements it by confirming it once we get a few ticks far enough away from it that we can confirm that we have a pivot here. Then the measured moves is going to fire, and you're going to see it on the chart. But the Auto-Fibs was there waiting for it. Okay, let me go to a chart and show you that, and then I'll try and wrap up here, and we'll call this part 1 of this series. Okay. All right. Now, this is something you have to be mindful of. It's easy to confuse the two. Okay, so let's see, what's the best way to do this? Okay, on the side here, I keep them on the side here. Now, I've been doing this a long time, right? So I'm very used to working with these. So I know, okay, I got to look over here to make sure I don't miss something. But that said, if I want to be sure I don't want to miss something, I can just hit Alt-F. And what that's going to do is going to put all of the Auto-Fibs on the chart. So everything that's over here on the side, right, now comes over, right? It's on the chart. Now, that can get messy, especially if you're trading on a smaller time frame, and you'll have the sell side and the buy side. So the reason that we give you the option to take them off to the side, where if I just go Alt-F, now I'm going to take them off, they're off on the side, they're off on the right side here. Excuse me. So you can still see them. You can still see targets here. I can see them. But if I were in the heat of the battle here and I'm not sure, God damn, where is that? Okay, so then I can just do this. Now I see them. So I go, oh, there it is. There's the golden zone. Oh, it came down. Oh, look. Now let's go in there for a second so you understand what you're seeing there. Okay, what is on the chart right now? So you see them here. I see I've got 2 50s and 2 golden zones here because I've got 2 pivots to pull from. I've got this pivot here and I've got this pivot here. So these are the golden zone and 50s from those 2 pivots. Right? So we don't know which pivot is more likely to fire. It's more likely to be the dominant, right? This is secondary. So okay, let me try and explain it this way. So we went up here and we hit a golden zone. We came down this way. Remember, we had a target down here, but it didn't get hit. So we come down here. Now on the retracement here, we broke the 65 on this side, which is why it's more likely that the next time we hit, if we come down here, it'll be the golden zone tied to the dominant pivot, because this one already broke. Well, we don't know for sure. We can't say for sure. That's just the most probable, because what the algorithm sees is not the swing. It doesn't see this. That's not what it sees. What it sees is dominant to dominant. So it's going to see this pivot to this pivot, and as it comes down, that's the 50, and it doesn't care about that, right? Once this gets stopped out, then it's going to work from one pivot to the next. So if it comes down there's the 50, right? Remember, you can look over to the edge to see which one it relates to. There's the 50 from this swing low to this swing high. If it goes a little lower, there's the golden zone from this low to this high. There's the target. Right? So now if I put the measured moves back on, measured moves back on, you see, there isn't one here. Right? Well, one, because this broke. These are the ones that confirmed. Everything that's on the chart confirmed. These are unconfirmed. The thinner lines here, you could probably change the colors if it was confusing you. You'll note that when it's the measured move indicator, it'll be right in line with the pivots. right? You see here, these will be right in line. Whereas if I draw it, you know, it'll be if I were to do something like this, oh, here, right? If I do this, then I have it set to carry all the way over to the right, so I don't miss it. So if it's a big one like this, I don't want to go, wait a minute, which line was it? I want to be sure I can see over here. Oh, there's the 3.8, there's the -6.1. Pardon me, there's the 23.6, there's the 6.81. I want to know where those are because I'm hoping maybe I can get to second target. But if I got to first target here and I've got this giant supply zone, look how big that supply zone is, right? Then that's from the Fed news last week, which you have this massive supply zone here. Now, if you've got a target up here, right? I mean, at the very least, considering how enormous that supply zone is, let's see if I can bring it back, right? So this is Fed news, right? So we have this massive supply zone. Look what happened the first time we tagged it, right? That's literally to the tick. All right, I mean, to the tick. Right? I'm not making this up, right? I'm just showing it to you. Right? So if you get into that big supply zone, are you making the assumption that, oh, well, I've got a formula and I stick with that formula until I get through to my target? Maybe not, right? Maybe this would be an area to be a little bit more conservative about protecting your profit and trailing a stop or taking partials off, right? That's the only way you can do it. There is no other way to do it and guard your profit, because number one goal is to guard your capital. And I think it's much more painful personally, psychologically, to have a trade that's going your way, that you've got nice profit in, that now comes all the way back and turns into a loser. I think that's much more damaging than a trade you put on and you're stopped out quickly. I'd rather take that than have one that had nice profit and then I was sloppy in my money management or risk control and I let it come all the way back and turn into a loser. At least if you get far enough here, you want to get a little distance here. You don't want to do it at 5 ticks. But if you get a little distance past that, if not move to break even, reduce the risk. Right? And this is just common sense trading stuff. I probably don't have to tell you guys that. Okay, let me take everything off again here and try and make this point one last time here. Oh God, how long am I going? Oh, 45 minutes. Okay, maybe this is just going to be too long, but I'll send it to my customer here. Okay, so as we're looking here on the side, right? Let's take the measured moves off. Right? Anything here now is what's active. These are the potential pivots, right? Again, Alt F brings them back on. Oh, you probably see, well here let's go to a higher time frame here and see if that simplifies. Let's go to the 60 and see if there'll be far fewer of them. Well, not that many, far fewer. There'll be far fewer of them here. Okay, I'm going to wrap up here, and then I'm going to come back with part 2 of this, I guess tomorrow night. Okay, so first, all right, let's take, oh shit, here, hang on, let's take the measured moves off. Okay, 60-minute chart. I'm not going to get into discussion about market structure because, again, I've got 11 videos talking about all of this, right? So we can see downtrend, uptrend. Right here, what's the trend? Right? If you look, well, here, I like those on the right. Here it's easier to see. So let's put that on the right. Okay, so 1 hour trend is down. Why is the trend down? Looks like we've got a raging uptrend. Why? Because this is the last break of structure right here, right? So we don't, until we get the next break of structure, which would be this high here, right? The trend remains down. Now that can be deceptive, right? So you have to be mindful of, wait a minute, trend is down. Well, yes, it is, because we could go from here right up to that if we don't break it. Actually, the way I have it set, I have to have a close above that high before I'd call it a trend change, right? So I could go right up, double top, and come all the way back down, right? Trend didn't change. I digress a little bit. Okay, let's talk about what's up here. Okay, so let's come back this way. Let's come over here. Okay, this is Auto-Fibs. Okay, so I'm going to just go Alt F. Okay, so you can see now. Look, you can see these lines. So when you do that, it's going to show you the pivots that it's using. So it's using this one, this one, this one, and this one to all create that cluster right here. Okay, this is a good example, right? So this cluster of golden zones right here. So we're coming up into that, right? So whether we get there in the overnight, I don't know, but I can also see them over here. So if I look at that and go, God, no, that's too much on my chart, right? So I can just take them off, right? Now I've got them over on the side, right? Now you look down here and you go, wait a minute, what are these, right? If we're going up, I thought the next thing, well, what if we start coming down? right? What if this is the pivot? We don't, oh, remember trend is down. We start coming down. Well, wait, I got to pay attention to these guys down here, don't I? All right, so let's turn those on. Let me open this up. Let's take you off. Okay, we start coming down. Well, first we can see the pivots. So first I've got a 50 and a golden zone I got to deal with, right? And they're pretty wide, right? Now we're on a 60-minute. Look at the gap here, right? That's between the 50 and the golden zone, so I know it's a more substantial pivot. But look here, I've got another one down below. Look how wide this one is, right, from the 50 to the golden zone. So I know these are big swings, right? So if I could draw it up. Sometimes this is good to do while you're learning this to go, okay, wait, let me see that. Okay, so there's that one. Oh, well, look what happened here. All right, we hit golden zone here, so that was a good one. So now let's get that off of there. Let's get the next one up here. Let's go swing low. Remember, now we go swing low to swing high. Right, we've got to pay attention. Here's the 50, here's the golden zone. So if this starts coming down, right, we've got multiple pivots. We have this pivot right here. We'd have to pay attention to that 50 and golden zone. But we've also got the larger. Remember, the algorithm doesn't care about the swing. For those, it's only seeing this. It's seeing this as it comes back down. That's the 50. It doesn't care about anything that happened in here. Does not care, right? It doesn't care about this swing, right? That's a different bit of code that's doing that. So you've got one here that's so this one here, this one has yet to hit target. Now don't be confused down here, because this is showing like, oh wait a minute, that looks like it broke. Well, no, it didn't, because this is an easy mistake that people make. This is not the measured move indicator. This is the Auto-Fibs. So this has yet to happen. The fact that it shows that it looks like it broke here, that's not accurate, because the measured moves are going to show you where the completed ones are. Let me see. So you see, this is actually a perfect golden zone tag. It's not made it to its target yet. So here, these are what's active next. They haven't been hit yet. So if I take the measured moves off here, and then I go back to Auto-Fibs, if we start coming down, this is what's in play. Well, first, right, you've got these two. Right? It looks, I think that's happening because I'm disconnected from data, or those would be off. As we start coming down, there's the 50 and the golden zone from this pivot. I just went through this. There's the 50 and the golden zone from the major swing low to swing high. So if we come down here, if we break this one, oh, okay, oh, we're breaking that golden zone. Oh, okay, wait a minute. Oh, now we're to the 50. Now, this is, I'm going to just kind of use this as an example. One of the questions that this customer was asking me is, okay, well, if we're coming down to these kind of locations, how do I approach entry? Do I sit with a limit order here at the 50 and then I look to add more at the golden zone? Well, that's not an unreasonable thought process here. The assumption being, because we know the algorithm starts at the 50 and will continue to be a buyer all the way until we get a close below the 65. The theory might be that, okay, if I put a part of my order at the 50 and I've got the rest of my order at the 618 or wherever whenever you see the potential pivot, you'd end up with some sort of a dollar cost average price and probably splitting the difference, assuming it was an equal number of contracts that you bought at the 50 in the golden zone. Well, it's not. That's not unreasonable. And if you're an option trader and you're working off of a 60-minute, that might not be an unreasonable way to approach it here, because how would we know if it's going to stop at the 50 or the golden zone? Well, okay, we're going to get there in a second. But if you had an average price down here and you know you've got a target up here for a swing trader, hang on, that thing clicks. Well, we're going 3 days into it. Now, do we know that's going to happen? Well, of course not. I just know that the potential for that is there to happen. I'm not even here yet. But the Auto-Fibs is not going to let me miss that. So you might look at that and say, well, wow, that looks pretty good here. Right? I got a high volume node. If I'm at the golden zone, I've got, I just happen to know that that's the prior day's low. So I've got some confluence of technical components here. But slow down, because one of the things we've tried to do, and I think this has been one of the really powerful additions to the market structure indicator, is that we're giving you additional clues as to where you might find strength via the order blocks, the supply and demand zones, as well as the fair value gaps. Now down here I have, this is a giant order block. Giant. I mean, that's for a 60, what are we got there? I mean, that's a pretty big order block. What do we got there? That's about a $3,500 order block on a 60-minute chart. Now, so for a day trader, you know, again, depending on your capital, that might be too wide a range. But for an option trader, if you tapped into that, that might be something you could use to get your first one on. And if it starts to confirm, then you start adding to it. But what I want you to see here is, as we start, let's just assume. Oh, what's the best way to do that? Okay, let's just assume that we start to come down, right? So for whatever reason, we start to come down. Okay, so the first thing we're going to run into is this 50, right here, this 50 and this gold. That's the first thing we're going to run into. Okay, well, okay, look left, right? Is there anything here that might be useful to me? Well, I certainly got a high volume node, and I can understand why based on that little consolidation. I have more here, more here. So this was a point where the market paused, and if a institution or a whale, call them what you like, we're looking to enter the market, well, that's not a bad place for them to do it because they can bury some of that size, right? They can hide it, right? It doesn't reveal as much because it's a high volume node, so we know a lot of business has been done here. So this might be a place where you'd be looking for some sort of reaction. Now, that doesn't mean you sit here with a limit order. I never do that because it's too easy for something to just blow right through it. If it gets there, I want to see evidence that there's going to be a reaction or that the market is responding. And I may look at that and say, oh, okay, well, here, this is interesting here, but I didn't get to target, so I'm a little suspect of this, so I might wait for a higher high, and then, oh, do I get a higher low? And then I can get in here on a smaller degree because, again, it doesn't matter. It's the same pattern, just at a lower time frame. If I go here to here, I might wait for that one and say, oh, okay, I like the sound of that. Okay, maybe I'm going to get something more substantial here. Right. Again, it could be, oh, I'm going to retrace here, and then I'm going to go again, right? That's a series, right? You see these series. Well, I've got them turned off right now. But you see series where they just go 1, 2, 3, 4, 5, 6 in a row. You say, oh, okay, good, right? So I started at this 50. I got a swing. I got a higher low. Oh, it happens to be between 50 and the golden zone. Oh, boom, I'm in. Now, that doesn't mean that I sit here and go, oh, well, okay, I got that 50, so I'm staying long until I get up here. I don't think that's the right way to think about it. There's just too much can change, too much can happen. I don't care what time frame you're trading off of. Okay, let me get those out of here and get back to my point. Okay, so if the market starts coming down, well, I'm trying to draw your attention to the fact that, well, there would be some reasons to be looking here. Let's take these off. Oh, no, I'm going to need them because we come down. Okay, so market's coming back down. All right, so we start coming down. Well, we look here. So, oh, high volume node, all that reason to here, consolidation. Got this. Oh, it breaks the 50. Oh, well, where's the next spot where I might look? Well, here, I've got a golden zone. Okay, but let's look over here. Okay, I got a high volume node as well. Not as high, but I got a high volume node here. That's the outside white line is the 30-day. It's a little bit lower volume on the weekly. But what else is here? No, I've got a fair value gap here because of the distance from this high to this low. I've got imbalance here. So there's real possibility here that there's unfilled orders again, right? We're on a 60-minute. So we come back down here. Could be unfilled orders here. This point being, there's imbalance here. Bulls overwhelmed bears here. We're more aggressive here. So if we come back here, you might have those that purchased here that created the imbalance defending. Right, that's the fair value gap. Might be unfilled orders. Might be a different algorithm. But what else is here? I got a golden zone right here. So when we look here, so if it breaks the 50 and it's coming down to the golden zone here, well, I've got a fair value gap here, and right below that, I've got an order block. Well, you might say, well, oh, but if it goes to the order block, it will have broken the 65. Well, that's absolutely right. But what's right below it? The next 50 at that order block. So you might look and say, oh, shit, well, I got stopped out on that one. Oh, okay, well, what about the next 50? Do you want to take that trade? Well, again, that's why I wouldn't sit there with a limit order, but I am definitely interested because I know there's an order block here. This is the consolidation that led to that imbalance. Right? So I know there's a high probability here that there's likely to be a reaction. Not necessarily, it could be that and then we do that. But there's likely to be a reaction here. So if I get that reaction, that's what I'm looking for. So now I look at that and say, okay, well, now I'm long at the 50. Am I just going to stay long until I get to that target? That's not how I would approach it. Way too much can happen on the way there, including I've got multiple measured moves to get through. Multiples, right? Because when we're going back the other direction here, I got the same thing. There's a 50, there's a golden zone, big golden zone, another golden zone, another golden zone. All of those have to be cleared on the way to get to that target. So you're going to buy it here and stay with. Well, I mean that's not terribly unreasonable if you're for an option trader. Say, okay, I'm good. I've got this, and unless I see this happen, I'm going to stay with that position because I've got good odds of making it. Right now, let's say it keeps coming down. Oh shit! Oh, I thought it was going to hold there. It's going golden zone. Okay, now look again. Look to your volume profile. Very high volume node. Why? Look at all the consolidation. You can just see it, right? You can see it just in the price action, right? Look at all. What is that all tied to, right? All of this consolidation. So would this be an area you might, let's call it an area of interest? Yeah, that would be an area of interest. Not to mention, I've got yesterday's low. I've got a golden zone. I've got a high volume node. I've got now here. This is. Right, so I did this to declutter the chart. There's a demand zone here as well. But if I go back from wick and I go to candle and then I recalculate it here, well, that's why I was hiding it, because I've got a massive demand zone here. I didn't want it to confuse on the chart. But you can see right here, there's an order block right here. So here, I'll draw it this way. There's an order block right here. If I use the candle, right, the last down candle, right, before we head up. So here we're heading down. Now, whoosh, off of that. So as we come back to this, okay, man, I broke the 50. I went through the order block. I went through the fair value gap. But now here I come. Oh, shit. I'll draw it again. But here I come into the demand zone, add a golden zone, right? So I've got demand zone, golden zone. I'm inside a massive demand zone here from the prior day. I've got this golden zone still active, right? This target is still alive until we get a break below that 65. So I've broken here. Oh, now I'm here. Now, are you taking that trade? Well, again, look right now. Wait, the risk reward here is much more friendly. Look at the. Jesus, what is that going to be? That's going to be. Oh shit, that won't even be. That won't do it. Let's see if I can do that. So if I'm entering here. Oh, hang on, let's get the stop. All right, this is, I don't mean to make this like unrealistic, but what are you trying to get there? That's 12 to 1. That'd be an $11,000 swing on a 60-minute. Now, what did you risk here? Just visually, that's the attraction to the golden zone, right? Over the 50, because if I'm doing it with the 50, right, it looks a little different. Right, I got a much bigger risk profile here. It's still good, right? If I were gonna, oh shit, here. Well, how far? Oh, that went a ways up there, didn't it? Okay, let's get you back down here, right? But it's not as good. Still good. I don't think there's any swing trader here would be disappointed with that. So again, if you started at the 50, again, if it's me, I'm going to do this with options. So if I bought a call here and a call here, or sold a put spread, or whatever you wanted to do with regards to your option strategy, as long as I get a bullish bias here, well, okay, I've got that kind of upside potential there. Right? I'm risking 2,600 here to make 10 grand. With the other one, I was, oh God, can I do it? I was risking 775 to make 11 grand. Come here. Right, better risk reward. That's the attraction of the golden zone. But the 50 just is valid. Right, here, look, 50, 50, golden zone, 50. In between, well, that's coming down, right? So here's one with a target way down here. It hasn't been hit. So here's a swing 50. Swing 50s and golden zones. You often see them clustered here. That actually pings the 50, but there are golden zones right there. Here's in between. Here's golden zone, right? Now note, is a tick gets through it, but we don't close above. That's why it stays active. Here's right to the tick. There's all the targets, right? So this target and that target right there. That's a little bit. It swung, came down, golden zone, got its target. What's at the? How about the pivot high? All right, another top hat. Right, no, these, boy, don't let these pass you by. But right, if you don't have this, how are you going to know? Right, are you going to draw all the swings that are going to show you? God, there's 1, 2, 3, 4, 5 golden zones right there. Are you gonna remember to draw them? Are you going to have the time in the heat of the battle? Maybe you would. Right, here it is again. Top hat, smaller top hat. That's high probability. because the market's going to have to blow through all of that sell side resistance, right? All of those algos are going to have to get. Now, could it happen? Of course it could happen. Interestingly, so look right there, which is why you got to be mindful of how quickly trends can change. Even on a 60-minute, when we break this structure here, that's an uptrend. Boy, it doesn't last long. Right? That was the Fed day. Oh, that was unemployment. What was that? Shit, it was I can't remember what day it was. Unemployment or minutes, I can't remember. Same thing over here, right? That's Fed, right? This is all Fed. Now, what happened today, right? So you look at it and say, oh, what is something changed? Something changed in the market, or is it just the natural ebb and flow, just whales moving the market around because they have a longer-term plan in place, right? So remember, they move the market where they want it. We don't. We have no influence. We have zero ability to influence the market. Zero, right? Whales move the market. We just try and tuck in behind them and try and follow what they're doing, which is why. This is a long video to try and get to the conclusion that there is no definitive answer here. There is no this is the right way, this is the wrong way, right? The goal is to be profitable, and you're going to have to adjust along the way to what's happening throughout the course of the day. As I showed you, you could be in a perfect trade, it doesn't get to target, and slams back the other way. Okay, so I think what I'm going to do, I'm going to stop here because this went way too long here, but hopefully you got something out of it. I'm going to stop here, and then I'm going to come back to this because I'm sure, particularly, my guesstimate is the customer that I started with his questions here trying to make this is going to hit me with some more questions. I'm just going to guess. Okay, so I'm going to wrap here, and I will send this. I'll post this so. I'll make sure this customer can see it. I don't know if I'll make this public or not. Okay, guys, I'll be back with more of this, and we'll finish the conversation.